Good evening, everybody. Welcome to the September 2nd edition of the Locke in Your Success Trade and Market Update. I hope everybody is having a great Labor Day weekend. And just as a reminder, the markets are closed tomorrow. That would be on Monday. And we'll be reopening again on Tuesday. I'd like to start out our discussion with just a bit of a continuation on what we were talking about with the Greek or T plus 0 line issues with that we're currently experiencing with the Thinkorswim platform. Again, it's not really a problem necessarily with the calculations. In other words, there's no error with Thinkorswim's calculations. It's just the formulas that they're using are very simple, and they're not taking certain information into account when they're processing their models, and that's giving us a severely it's giving us a T plus 0 line that is much different than reality when the price starts moving around. So if we take a look at our M3 position for September, for example, we're getting this positive 13 delta. We look in it in option view, we're getting a minus 80 delta, and you can see the very large difference in the curvature of our T plus 0 graph. Looks like here we're taking on, actually this is pretty much a perfect M3 position. Looks like we may be starting to get a little bit close to taking on too much upside risk, which is the case if you look at our delta. And when you look at Thinkorswim, it looks like we're taking too much downside risk, which I do not believe is there. We talked last week about changing the settings in our application settings to the SMILE strategy of SMILE approximation, and we also said that that does make our T plus 0 line look a little bit more normal, or what I believe it should look like. However, it does have a big consequence on our on our profit and loss, our current profit and loss. It jacks it from $500 to $1,400. And I went in and I talked to Thinkorswim about this, and they basically said that volatility model, don't use it, it's not that reliable. So I guess I would recommend you not using it, since the developers of it don't seem to think that much of it in the first place, which kind of puts us in a place where Thinkorswim isn't terribly useful as far as projecting profit and loss right now, or projecting our T plus 0 line right now. And they don't seem to have much of a desire to do anything about it. So my only thing I can recommend to you is either continue to watch, and I will keep you updated on the difference. As of right now, we are looking at minus 60 to minus 80 on option view, and if we use the proper setting that gives us the proper profits and losses on Thinkorswim to plus 13, that's about minus 9 difference per butterfly on an M3 position, which means if you are 0 delta on Thinkorswim, you're really minus 9 on option view, and that's per 1 butterfly. If you have 10 butterflies on like I do, you're looking at a difference of like 90 delta, almost our whole adjustment range. So you kind of have to picture in your mind what this T plus 0 line should look like. If you're trading with any size, you should just go ahead and make the investment to get option view. And you don't necessarily have to get real-time data. You can look at it half-hour delayed and get an idea what the difference is. Just so, and that's a workaround. If you're trading small, just stay tuned. I'll try and keep you apprised of the change. At some point, I would expect this to go back to normal. Once our put call skews even out and so forth, we should be back to normal. For right now, option view is the only program that I trust in this. And like I said, the system was more or less developed and tested and continually monitored by this. When we did get a Thinkorswim model difference in the past, I always went with the option view model, and that seems to be the more correct model. Again, I've never seen a skew this large. Sometimes it's been as much as minus 4 or 5. I've never seen minus 10. I actually have seen minus 13 just very recently, earlier in the week, which is a lot. So again, my recommendation, option view for monitoring if you're trading any size. All right, enough of that. Let's take a look at the markets. We look at our SPX chart. This week we had just a fairly tight range of movement with a little expansion in range towards the end of the week. Pretty much what we expected from last week to this week. We have a topping pattern starting here. If you come in here and look at a shorter term chart, say 60 days, this here is more or less a complex head and shoulders pattern setting up. On our shorter term charts, which is a topping chart, if this has a range, it's about like a 20 or 25 point topping pattern, which means if we drop down, we're probably going to be looking at somewhere around 1380, 1375, which if we go into our daily charts is going to line up very nice with our 50-day moving average. If this topping pattern happens to confirm and we break down, that's where I would expect to go first. And from there, we're just in this range. That move doesn't have a ton of meaning to it. It's just showing us, like I said, just a shorter term pullback. I think that's going to be seen as a buying opportunity, and the market's just going to continue sideways or possibly higher. If we don't even bother to break this head and shoulders pattern and we just reverse, and we wouldn't know that until we start clearing this shoulder, which is around what, 14, 15 or so. We start clearing that out. Realistically, where are we going? We're going up into here with old highs. Again, that doesn't mean a whole lot. So with the absence of any really large amount of news, there's not really a whole lot of market movement on the SPX. It means a whole lot. And if we break down, all it means is we have an expanded or more volatile range we're going to deal with. If we don't break down, we're probably going to stay in this really tight range we've been in for quite some time. If you look at this last run here, which is somewhat similar to to what's going on now, we had a large up move and extended period of time of sideways. We broke down to a recent support level, and then we kind of start creeping back up again. If that breaks down, this is what I would expect. A breakdown into here, a little bit of volatility into this trend line, and then come back up to highs again. From there we may have another market opinion, but that's what I would expect with a breakdown, and even a breakup. I would just expect more tight range. Looking at the NDX, we poked the top of our channel only up into this area. Nice cup and handle pattern forming, which again is bullish. If this pulls back, we're probably only coming back to the 20-day moving average. And again, we're probably likely to stay in a sideways range. Dow is looking a little weaker than the other guys in this past week or so. Again, we break down. We're probably only coming into this trend line and then continuing up, which brings us all the way back to the Russell. If the SPX actually confirms, we actually have a little head and shoulders pattern going on here, right? It's a very diagonal one, but it's very clear. It's actually more clear than the S&P chart. We get a breakdown. We're coming into these previous lows, 50-day moving average, 20-day moving average into here. We get a break up in the SPX. We'll probably come into this range up at the 830 again. I just don't see the market going anywhere. We're going to have, a news event will push it somewhere, but other than that, we're just kind of hanging out in no man's land here. Longer term charts are still bullish. My bias is up. I still think we see new highs in October. September, just more of the same. As far as our positions go, this is our M3 position, as I was saying. We are up around $500. I believe that to be accurate. I do not believe the T+0 line profile to be accurate. However, I believe this is much more representative of what we're going to get with price movement. If we get a pull down in the markets into this area here, with the really low volatility, I often will take half profit target on these. Half profit target if we get near expiration, which is $2,500 would be half profit target on this. If we do pull down to that 780 level we were talking about, and prices tend to normalize, which they very well may if we get a little bit of movement, then I will take this off. If the market continues to stay here, we will continue the same plan we've been doing, throwing verticals at it to level off our delta as needed. Possibly a call if we run into a gamma trend problem. And as we go up, we will start rolling butterflies. In general, this position looks very good. I'm very happy with it. One of the things, just so you're aware, that we did over the course of the week, which I did do updates on, except for the very last move on Friday. Earlier in the week we added 3 of these 790, 780 verticals. I did do an update on the website on that, and just recently I added 2, or Friday I added 2 more of those, and that's just to make minor delta corrections. Again, according to this, you'd think I'd be crazy for adding those in, but because of the difference in the profiles, if you're looking at the option view, you can see where that would have totally made sense. The bearish butterfly for September was taken off on Friday. If we bring that in, this is what the position looks like. I was pushing around being up between $350 to about $600 during the day, depending on the time. I'm 21 days to expiration. My volatility is very low. I do not like being in a position close to expiration with volatility really low and being in the middle of my graph, and even worse, being towards the downside of my graph. I personally am not comfortable in that positioning. I think it's very dangerous to be in that position. If we get a hard down move with a large volatility spike, I will not get the position back. So I thought it would be very good if I'm up $400 or $500 just to take whatever I can get out of it and move on to the next month where it's much, much safer. So what I did is I started trying to leg out of this in the morning, and I actually got some, or I legged out of it throughout the day, got some favorable pricing, ended up closing it before commissions up $550, and with commissions exactly 10% our profit target. This almost never happens. I think in all the years I've been trading, it's the first time I've ever hit an exact number on a profit target after commissions on the way out. So right to the penny. So no complaints there. Our September bearish butterfly is closed. And we are also in a bearish butterfly for October. So let's take a look at that. This was put on at the 790 strike, and it's doing perfectly fine. It's slightly underwater. The market has been up a little bit, I think, since I put it on, or it's right around the same. But everything looks fine here. One of the things I would like to note is right here our delta theta ratio looks 1-to-1. It's not just the M3 we're having this issue with, it's also just a regular butterfly, a regular bearish butterfly, because if we come into option view and we go over to that position, oops, sorry, that's not the right one. Let's go into bearish butterfly. It's right here. You can see, and here's the position again. This is the exact same position. You can see I'm almost at 1.5-to-1 delta theta. Even if I am, I can't make the roll until we are over 810, which actually we are over 810. So if we continue to go up even a little bit next week, we'll probably end up being forced to roll this up to 810. We'll make a delta theta roll. As of right now, we are down about $300, three or four. No, actually, that's not right. Okay, this is I'm sorry. This is a 10 lot versus we're showing a one butterfly on Thinkorswim for our sample trade. This here is a 10, so you got to divide everything by 10. We're down about $38 really, and which matches up with Thinkorswim. But I just want to pay attention to the delta theta ratio is getting a little bit high. And it's not showing on Thinkorswim, but again, we're using option view Greeks. And that is all of our positions for the day. So we've done our market update. We're expecting more of the same. The Greeks problem, if you're trading a large position, I just suggest that you either wait it out because things should normalize and the model should come into line, or seriously consider getting option view software because you need correct Greeks, otherwise you're going to have issues. If you're only trading it small, then I would just put up with this, but you should be able to easily pay for this option view software if you're trading this thing with 5 or 10 contracts or something. And everybody have an awesome Labor Day weekend. I will update you with any changes during the week. Thank you and good night.